We are in a debt spiral. Unless you want to stop being the world reserve currency and get on a Bitcoin and/or gold standard, a neutral money standard, you have to bring rates down. You have to finance the US government at any and all costs. Bitcoin is going to 250K and then it's going to $1 million. They're going to have to print so much money, debase this currency so much. We are going to see so much inflation, especially in the scarce desirable goods, particularly Bitcoin. Bitcoin inflates the most. It performs the most. You guys have to understand what's happening. You have to. Interest rates are coming down not to juice the economy, not to solve for jobs. They're coming down because we as an empire are about to fail.
The United States is trapped in a debt spiral. To keep the system alive, rates must fall, money must be printed, and the dollar will be debased. That collapse in trust pushes capital towards scarce assets, with Bitcoin positioned to skyrocket as the world abandons paper promises. That's the latest message from Jack Mallers, CEO of 21 Capital and Strike. Right now, the Federal Reserve is being forced to bring rates lower, not because the economy is healthy, but because the US government cannot fund itself at higher borrowing costs. The result is an endless loop of debt, printing, and debasement that eats away at the dollar's credibility. In this kind of environment, money naturally migrates to the assets that cannot be inflated away. For Mallers, that means Bitcoin standing alone as the scarcest and most desirable form of capital left in the system. Make sure to stick around until the end of the video as Jack Mallers breaks down exactly why this setup could trigger one of the biggest repricings Bitcoin has ever seen. Before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, here's Jack Mallers with his market outlook.
This is about survival. This is about the United States has no choice. We are in a debt spiral. Unless you want to stop being the world reserve currency and get on a Bitcoin and/or gold standard, a neutral money standard, you have to bring rates down. You have to finance the US government at any and all costs. And the notion that Bloomberg and economists and bond portfolio managers think that this is about politics, they have no idea what is coming. We move on. Again, guys, what do you want to cut? And let me put it to you this way. In the wake of all of this political violence that we're witnessing, in the wake of all this societal divide, political violence that we're all experiencing, you want to cut human and health services? You want to cut Social Security? You want to cut defense? And by the way, cut them now, today, by 25% and permanently. And then we might have a chance, although that probably will cause a recession and for us to collapse anyway. Or else you cut your treasury expense. You cut rates. And the third mandate is simple. What Myron is proposing, Trump's pick for the Fed, what this new Fed is proposing is they want to control both the front end, so interest rates, and the long end. What this means, what is yield curve control? Yield curve control is if the 10-year goes higher than a number, let's say 2%, 3%, we will print unlimited money and buy it until it goes down. That is yield curve control, controlling the yield curve by printing money out of thin air. So we go on. The US dollar is having its worst year in decades. This is from the Financial Times. Guys, again, this people look at this and they say, oh, it's because of the tariffs. Oh, it's because Trump's a dictator. Oh, it's because Kamala Harris or blah, blah. It's because the left. It's because the right. It's because this. No. This has to happen. This is math. Guys, printing paper out of thin air to consume real stuff isn't a sustainable system. It's failing. The escape valve is the currency. The escape valve is inflation. It is the only way out. And we've talked about this before. The United States dollar used to be backed by the U.S. military. Oh, you don't like this system? Well, let's see if you change your mind if we put a weapon in between your eyes and threaten to blow the trigger and blow your brains out. Now, do you like the U.S. dollar? That used to work. That no longer works because we've talked about on this show. Globalism and exporting everything in an effort to be the world reserve currency has even exported the U.S. military itself. We can't produce rare earths. We cannot produce what our military needs to sustain war. So the U.S. dollar is no longer backed by the U.S. military. We no longer have the threat of physical power. We've talked about that on this show. So you have to understand what is happening. Do not get blinded by the mainstream media. Do not get baited into these rhetorics. The truth is very simple. The escape valve is the currency. The escape valve is inflation. It is our only way out. The fact that the US dollar is having its worst year in decades is no accident, guys. I'm telling you, every week, every Monday, I say the same thing. I swear to you. Another tweet from Arthur. This is a gem. With Fed board member Myron now confirmed, the mainstream media is preparing the world for the Fed's third mandate, which is essentially yield curve control. Let's fucking go. Yield curve control to Bitcoin equals 1 million. And I agree with him. Bitcoin is going to 250K and then it's going to 1 million. They're going to have to print so much money, debase this currency so much. We are going to see so much inflation, especially in the scarce desirable goods, particularly Bitcoin. Bitcoin inflates the most. It performs the most. You guys have to understand what's happening. You have to. Interest rates are coming down not to juice the economy, not to solve for jobs. They're coming down because we as an empire are about to fail. Look at our gross federal debt as a percentage of GDP. Look, been this high before. When? During the world wars. How did we bring debt to GDP from 120% down to 30%? Financial repression. Bondholders got smoked. Do you understand? Like, it's very obvious. We've lived through this. And the fact that Bloomberg, it also underscores how willing Trump is to upend decades of institutional norms to break down the Fed's longstanding independence in service for his own goals. That was written by a bond portfolio manager. Good game. Hey, listen, man. You can cry and pay to have articles written in Bloomberg, or you can sell your bonds and buy some Bitcoin. The choice is yours. Get you some sats in cold storage and prosper, or have fun staying poor. I don't know what to say. And people say, oh, Jack, he's a tyrant. He curses. He's so aggressive. I'm sorry. I'm committed to the truth. I'm not committed to the left, the right, the up, the down. You guys can count on me every single week to be honest, to be truthful. I'm not anti-American. I'm not anti-left. I'm not anti-right. I'm pro-truth. Find me a place on the internet that's going to spit it to you straight. Whether you like it or not, I call it how I see it. They are in survival mode at the expense of you listening to this. You have to take care of yourself and your family. You have to exit. It sounds dramatic because it is.
The pressure on Bitcoin came when the Treasury refilled its account by borrowing from the market. That move drained liquidity, made assets feel heavy, and pushed prices lower. Most people took that as a sign of a weak market, but Mallers sees it as proof of strength. He saw that Bitcoin was moving with real money flows instead of speculation, which is a sign that the market is maturing. And once the Treasury spends that cash back into the economy, liquidity comes back and Bitcoin recovers. Mallers also argues that the turning point comes with the third mandate. Yield curve control means the Federal Reserve will not allow long-term rates to rise, and the only way to enforce that is by printing more dollars. And the more they print, the more purchasing power collapses. For Mallers, this is the moment that sets up Bitcoin to break past $250,000 and beyond. Every dollar printed makes it stronger as the one escape route in a system that is running out of exits.
A lot of new data has come out just about how decimated the middle class has gotten and how bad it is. And I wanted to walk through in some detail and spend some time here. So this is from Bloomberg. Top 10% of earners drive a growing share of U.S. consumer spending. And in the image here, this is a photo from Beverly Hills. And you've got a beautiful Rolls Royce on the left. And like, what is that? A Nissan driving on the right. And it really visualizes the division within the economy at large that we've talked about a lot on this show. So this from Joe, key chart. Consumers in the top 10% of the income distribution accounted for 49.2% of total spending in the second quarter, up from 48.5% in the first quarter, reaching the highest level in data going back to 1989. Guys, I'm going to read that again. Consumers in the top 10% account for half of the total spending. The top 10% spend half the money. Are you kidding me? Look at this from bar chart. The top 1% of U.S. earners now have more money than the entire middle class. I'm going to say that again. The top 1% in the United States have more wealth than the entire middle class. Help with mortgage. The Google search is higher today than it was in 2008 financial crisis. I'm going to say that again. Getting help with your mortgage, that search on the internet, is more popular today than in the 2008 financial crisis. Please pay attention to this tweet from Lance Lambert. If the U.S. income spiked 60%, we'd return to pre-pandemic housing affordability. If U.S. home prices fell 38%, we'd return to pre-pandemic housing affordability. If mortgage rates fell 4.15%, we'd return to pre-pandemic affordability. Let me put it to you guys in plain speak, in Jack language. Houses are not going to become affordable anytime soon. Get fucked. Unless you get a 60% raise, unless the house you want drops in half in price, or unless mortgage rates fall over 4%, you're not getting a house. And that goes for not just the majority of America, the overwhelming majority of America. Home payments in Los Angeles are 90% of median household income. Are you kidding me? Average tax wages and salaries by household income. Look at the higher upper class versus the lower in the middle. And the idea that we even have a middle class is fucking bullshit. There is no middle class. You're either benefiting from this system or you're not. Fiat, the US dollar, has decimated the middle class. There is no middle class. We've evaporated the middle class. The heart and soul of this country is gone. It's been exported to China. You're either a financier in California, in New York, or you're poor. And not to the fault of your own. Not because you don't work hard, not because you cheat and lie and steal, not because you aren't dedicated to morals and principles and a prosperous living, not because you don't want to create family and you want to be scandalous running around committing crime. For none of those reasons. Because of the system. Because of the currency. Because the money is broken. That's why. You know, part of why I think I was put on this planet is to help Bitcoin achieve its potential and to help people realize the good that we can do based on the choices we have an opportunity to make. I only say these things to make sure you guys understand the truth and what's happening. We are living through a level of violence that is starting to rival the last time we were in a civil war. We are living through a fourth turning. We are living through the fall of an empire, a monetary regime change. We are moving back to neutral reserve assets. The only way out is through the currency, is through inflation, is through a division in the wealth gap, is through financial repression, is through theft from the middle and lower class, is through theft from future generations. You have to get Bitcoin. You have to get your kids Bitcoin. Your kids have to understand Bitcoin and save in Bitcoin. It is, to my knowledge, the only peaceful way out. If I wake up tomorrow and there's something better than Bitcoin, it'll have my attention, my time, my energy. As far as I can see, this is the only thing we got, guys. And we're all on the same team here. We're going to use open source technology, engineering, optimism, and hope to just build our way out. That's what we're going to do. That's what we're doing. I mean, we've provided $2.25 trillion worth of hope to the world in 15 short years. Not only with no help, but with everyone trying to get in our way. We can do this. We will do it. AI is disrupting being an engineer, being an accountant, being a lawyer. UK graduate jobs have dropped from 180,000 down to 55,000 in under 4 years because of AI. And I don't know if you guys caught it, but he said there's very serious societal and political issues that stem from such change. This isn't just you should be a factory worker instead of an engineer. There's a lot of systemic chaos that ensues from disruption like this. Graduate jobs crisis similar to blue-collar recession of the 1980s. Britain is in the midst of a graduate jobs crisis that is reminiscent of the blue-collar recession of the 1980s, according to the boss of one of the biggest recruitment agencies. James Reed, chief executive of Reed, says the number of graduate jobs available on his company's website had shrunk by 2/3 since 2021-2022. In an interview with Times Radio, he advised middle-class families to encourage their children to pursue a life of manual labor to secure employment as artificial intelligence destroys many traditional office jobs. The direction of travel is what worries me. 3 or 4 years ago, we would have had 180,000 jobs recruiting graduates on reed.co.uk. It's now down to 55,000, so that shows. Some people might say, well, that's your business, but every other business is saying the same thing, that far fewer graduate opportunities are available to young people. Let's look at unemployment rates by age for people with a bachelor's degree or higher. Guys, this is crazy. Look at how many 20 to 24-year-olds are unemployed, cannot get a job. Fresh out of college, riddled with debt, drowning in debt, and cannot become employed. This from Joe. Never looked at this chart before. You mesh consumer sentiment among ages 18 to 34 versus overall consumer sentiment. When it's green, it means younger people are more optimistic than the general public. In 30 years, we've never seen this sustained level of gloominess among the youth. My kids are going to go to the school they want to go to because I found Bitcoin. Because of what Satoshi Nakamoto created. Not for any of the nonsense that the United States claims to have given me in my generation. It's all a lie. Elderly generations, the wealthiest in human history, own 60 to 70% of U.S. assets, and they get 70% of federal receipts through entitlements. And every time the Fed pumps liquidity and keeps the system afloat, their portfolios rise.
With all of that said, Jack Mallers presents Bitcoin as the ultimate financial protection. It is a way for families to save outside a monetary system that values survival over fairness. Built on code instead of promises, it allows people to hold value without the threat of inflation or confiscation. It offers a peaceful escape when politics bring only conflict. Jack Mallers' message speaks to broken trust and broken lives. The monetary transition has already begun, and it will be long and difficult, but it will be worth it. Because Bitcoin is not just an asset. It is a declaration that money can be fair and that freedom can endure. As the ongoing spiral tightens, it remains the one anchor still holding. So if you want to stay ahead and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Don't pass up the chance to stay updated and make informed choices in the crypto market. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one. And as always, all the best.